Alrighty. I'm just gonna go over like kind of my thought process for this week going into the week. I don't know if anybody's like a little confused on why I was bullish or whatever, but we can remove these. And so literally this week was just the carbon copy of last week. Monday or Sunday gaps down with a complete inefficient new week opening gap, right? So this is last week. So when you have a new week opening gap that has zero buy side delivery, you're going to have price seek that. So this is your new week opening gap high from last week. And then all we did was it was Monday reversal, Tuesday, Wednesday, Thursday, Friday, pretty much all. Friday's going to continue until what? The objective is met. What was the objective? It just filled in the entire new week opening gap. But ideally, pretty much whenever you come into this new week opening gap, you really don't want to be looking for longs anymore. So same thing with this, right? Here's Sunday, we gap down, and then the same thing. Maybe it's a little clearer on the 4 hour. Yeah, the 4 hours a little better. So, same thing. Sunday, gaps down. Sunday reversal. Here's Monday. Monday you're expecting to be bullish. Why? Because you have this entire inefficient new week opening gap. So same thing. And what else do we have up there? We have our previous weekly high, which is up here. This is that I kept saying previous monthly high, which I didn't mean to say. I didn't even realize that I was wrong. This would be your previous monthly high. This would be also all-time high, but this is the weekly objective that I continue to outline, which I apologize if I messed anybody up. But 4-hour PD rate holding. After we're expecting Sunday to be the low of the week until our objective was met. This was my objective personally. And so here's Monday, expansion, Tuesday, slight consolidation. So why is price pulling back here? All price does is move from range to range. So all that means is we have a new range. We have a new swing low and a new swing high, right? Price is going to move from what? Premium to discount. Look at the candle bodies closing within the 4-hour FVG and above equilibrium. Look at the candle bodies with the consummate encroachment. The wicks do the damage, the bodies tell the story. All price does is go from premium to discount. Sometimes it might not always seek premium or discount before the continuation lower, but once you have that expansion over Monday, you don't want to really be chasing longs, because if you look at the 1 hour, do we have any really high probability order block? In my opinion, no. I'm not taking a 3 o'clock order block here with the fair value gap. I'm not expecting that to hold, especially since we're going into a new day, right? So that was the first example, and this is how you were able to trust this move on Tuesday, which is very simple. You have a 4-hour fair value gap, and now all you're waiting for is a timed PD, right? Right? Inside of a 4-hour FEG, because 4-hour, ideally you want a 4-hour or higher fair value gap or order block, whatever PD array you're interested in to be supporting you for price to go higher. But at what? A key time. So here's London. What does London do? London manipulates, takes out this pull of liquidity here. We get a change in the state of delivery at 6 a.m. out of what? A 4-hour PD array. And now we're expecting this to be your protected low until what? At least this high, which is what? Previous day high. And look how simple that is. The manipulation was already done prior to 9:30. There was no 8:30 news this day on Tuesday. I don't believe there was, at least. But the manipulation was done during London. 9:30, all that's left for 9:30 to do is just to expand. And you can see what it does. Shallow stop run inside of here, and then it goes. But that's why I was expecting price to get all the way up here, especially since this is the confirmation that I knew that this was going to be our weekly objective. See how this was our new 4-hour order block? Price rebalances this inefficiency, uses this down close candle as support, uses this 4-hour fair value gap as support. Now we're leaving a PD array, a 4-hour fair value gap, and we have big down close candles, and we get a change in the state of delivery here, confirming that now our next draw on liquidity is this high. And it happens during a Tuesday, so it's not unrealistic for price to move from this high another 300 points in 3 more days of the week, right? And as you can see, that occurs, right? And that's I was hoping that people wouldn't be chasing longs after this previous weekly high would be that got taken. On a lower time frame, here's a 4-hour PD array getting smacked, but more importantly, you're inside of this daily new week opening gap and this daily inversion gap or BPR, and you have a this actually wouldn't be your order block, but you're also inside of this over here. This is where my main focus was, and this daily order block over here that continues to reject price. And if you draw out the wick, you guys can see where price is hitting that to the penny continuously, right? Over and over. Now I'll just go over the one trade that I took, unless you guys have any questions. Any questions? Alright. I'm gonna just go over the one trade that I took on Friday, but just because it's the simplest. I don't want to confuse anybody with a little. The one trade I took on Thursday was a little more confusing, and I don't want to explain that yet. So I just want to use simple logic on the trade that I took on Friday, which is exactly how I kind of set it up for myself. So this was our previous weekly high up here. Got taken by 2 points, and so we go into here, right? And I want to actually I'll go over the morning move before this as well, because this is pretty much what I teach or what I try to get across to you guys. Remember that sequence 8:30, 9:30, 10 o'clock. 8:30 is only important if there's high impact news. Friday there is NFP release at 8:30. It's time then price, right? That's what all ICT teaches. So what did I just go over in that last example? Price moves from what? Range to range, right? And from what? Premium to discount. So this is our last. For me, this was the last turtle soup that caused some sort of expansion, right? If you're looking at the hourly, this is the last manipulation leg before you got some kind of move. You could use this one as well, but I would just use this since it's the lowest low out of this one. And this was also a previous daily low, right? So if we're focusing on 8:30 to be important today, and we have midnight price as well. So if we delete this candle, what is this? This would be a consolidation range, right? Price is stuck inside of here, this hourly bearish for value gap, and price is sitting inside of this hourly order block. So what was I expecting 8:30 to do? I have no idea what 8:30 is going to do. That's why I let it play out. Here's what 8:30 did, right? So price, open, load, what did it do? It swept liquidity, swept the range low. Why is this low important? Because from 20 to midnight, that's Asia, right? So 1 a.m. could be classified as Asia or London. Realistically, London starts at 3 a.m., but this would be your timed low. Range low. Timed key range low, right? In what? This was in a premium, so price is most likely going to take this. So once I saw that, now what am I waiting for? A 15-minute change in the state of delivery. Here's your 3 down close candles. Price manipulates underneath midnight, takes the range low, is inside of a premium. If you look here, Price is inside of a 15-minute fair value gap. Right here. That one doesn't get used. Hourly order block. Right here. And now going to the sequence. 8:30, 9:30, 10 o'clock. So if 8:30, ask yourself, did 8:30 do anything meaningful? In my opinion, yes. What did it do? It manipulated the external range lows. And you can see the candles close what? Back inside the range. So now you have a key time expecting, and you're already bullish because you're expecting previous weekly high up here. So if we're expecting our sequence to occur, 8:30, 9:30, 10 o'clock, if 8:30 did the manipulation, what is 9:30 most likely going to do? If 9:30 normally is your manipulation, then what is left for 9:30 to do if there's no manipulation? Just expand. So now you have a series of down close candles that's confirmed by an important time, 8:30 news. That's your new order block. You can also expect price to use this wick if needed. And you can see price is institutional order flow entry drilling inside of this 15-minute wick. That's bullish. Wicks are gaps, remember? So say if this was a fair value gap, you would be bullish here, seeing it mindlessly or very smallly tap into this fair value gap, right? So that's an institutional order flow entry drill. And then so now you can be expecting this low to be protected until the previous weekly high. And you also create a breaker. You have a low, high, lower low, higher high, right? Here's your breaker on the 15-minute. Note the candle bodies, right? Everything's closing inside. So going to 9:30, if you're expecting 9:30 to have, or if you're expecting 9:30 to only expand, you don't need any form of stop run. So I was kind of pissed at myself because I missed this entry. I knew exactly what it was going to do. I thought it was going to sweep this low and then just run, and I just didn't trust it because I don't have a lot of experience with this kind of entry. But ideally, you can either just buy these lows, anticipating the short-term stop run, because that's mostly what 9:30 will do, since it's not going to provide a major amount of manipulation like 8:30. Or you can just make it even simpler on yourself and literally just buy the 15-minute breaker or the order block after 8:30 and just put your stop loss at the low. So size accordingly. You could just buy here, stop loss at the low. So you can see it's 78 points, right? But your target's 97. So ideally the low doesn't get taken, so you could even decrease your risk a little more, like use the halfway mark of the wick. I would probably use the third quadrant in this particular place. I wouldn't be risking 70 points personally. 60 is normally like my max with a few amount of micros, but see now you're at a 1.5 hour trade. So that's probably something that I would do. Or since if you don't want to be doing this, you can anticipate you can get a better entry on the 9:30 candle. And so this is what I wanted to do. As soon as you get the stop run here and you get the candle closure above, all this is telling you is that you're on side. You can literally just market buy, and now 9:30 low should be protected. So instead of now having 60 points of risk, say you got in here, you got in immediately as the close. Now you only have 29 points of risk for a 67 point take profit, right? And so this really does work. You just have to know what you're looking for. And you can see your take profit would be hit very fast. So this was the most ideal entry here for this day, just because I knew this was going to get high or get hit. And also, what do we have? We have a failure swing of a data high, right? 8:30 news high, important, nested inside that previous weekly high. So we have a failure swing before our weekly objective. That's a magnet for price. And there was a bunch of SMT with ES, so you're not chasing longs after this. And that's why I didn't enter off of this, because I didn't want to have a lot of risk. Ideally, I wanted to enter somewhere down here. Stop loss was here. Take profit was here. So almost a 2-hour trade, but it never gave me that. So I was fine with missing this trade. And then you guys saw the Trump tweet, tariff, whatever, manipulation, boom. So once I saw this, I was like, okay, um, this is now the trade that I actually took. Once I saw all this displacement through, here's 830 low. That's a important low, right? Then we zoom out. We're gonna watch to see if we get speed and displacement through this timed low, right? So if we do, what's our next objective? Previous day low, which is down there. So if all I did was wait for the 15-minute candle close, and that 10 a.m. candle took out previous day low as well, so I missed all of that trade, and I avoided the entire morning because to me, I wasn't trying to trade this until something very, very obvious popped up. And so my trade was around, let me actually check. I took my trade at 2:16 p.m. So I continued to wait. I saw that the 15-minute fair value gap here was being used as resistance, so I was expecting a continuation. Where was I expecting a continuation from? So let's get to around 2 a.m. or 2 p.m. Okay, so here is what I was seeing. Here's previous day low. We close below here on the 15-minute. To me, that's significant. And this is our 15-minute order block once we get a candle closure below as well. So 11 a.m. confirms these two up close candles as an order block. And now we have previous daily low acting as resistance. And we have the order block and the candle bodies respecting that opening price. So to me, that's perfect. And then now all I waited for was another 15-minute order block creation, which was here, confirming that now this high should be protected until at least the lunch low. And so I actually missed the best case scenario entry, which would to me was this 5-minute breaker. Here's your breaker block. We inversed all of this after a short-term stop run. Missed all of this. I was expecting this 5-minute fair value gap to stay open just because of the speed through this area, and now this breaker block that was created. Breakers leave breakaway gaps. That's why I was expecting this to hold. So I wanted a short here with the stop loss at the high of this fair value gap. But I didn't do that. I wanted to wait for some kind of retracement inside of this 15-minute fair value gap and the 15-minute order block. But I went to the 1-minute, and I saw that PDE rays were starting to, the 1-minute PDE rays were starting to be very violent. And what I mean by that is every PDE ray on the 1-minute was holding price lower. That's what I continue to see. So we have a small volume imbalance here that price couldn't even get into, and then we go lower. Every up close candle is acting as resistance. And so to me, that's a very heavy sign of price action. And we have our short-term drawn liquidity that's close. So as soon as I saw this 1-minute fair value gap get respected, we displaced lower, creating a fair value gap. We had another up close candle close below. All now I'm waiting for is another confirmation sign. So I wanted to see a little longer. Honestly, this was the ideal short right here. A entry like this, stop loss at the high, and then take profit would be at the lunch low. So I saw this one get respected as well. I didn't want to rush just because I already waited the entire day, and the 15-minute fair value gap was up here. So we can mark this out in red. But as soon as I saw this 1-minute fair value gap displace price lower without the 15-minute fair value gap getting tapped into, I was like, okay, now I need to get in because this is the last leg of distribution, and price is going to deliver without me. It's too heavy. It's not going to get up here. And so I saw this fair value gap get created. I didn't want this fair value gap. Why didn't I want this fair value gap? Just simple premium and discount. Also, this is where your order block was. So ideally, I wanted this upper fair value gap. I literally went short right at 610. I got filled right here. Stop loss was at the high. I was 15 micros deep. So I only had 15 points of risk. And my TP was at this low. So 1.7 hour trade. I got in. As soon as I saw that, I knew I was on side. Stop was at break even. We closed below this next series of down close candles. Our drawn liquidity is literally 5 points, 6 points away. I'm not expecting price to come back up into here. If we mark out the consummate encroachment of this fair value gap, the candle bodies are closing right outside of that. As soon as I saw this and then price displaced lower, I knew it was on side. Stop was break even. Risk was removed. Now I'm just waiting for price to hit the drawn liquidity. Here is the 1 minute fair value gap that price could be using as well. It spiked up into there. I continued to just look at the candle bodies respecting the PD raise. That's all you want to be looking for when you're inside of these kind of trades. Don't be focusing on the amount of money that you're risking. Obviously do that before you trade, but your focus should be on what the candlesticks are telling you and what they're giving you back as feedback. So I like how it closed. It couldn't even close inside of the fair value gap here. And I also got in after the 210 macro. So I liked that as well. I saw that displacement was occurring at the 210 macro, and price was so weak that it didn't even get into the 15-minute fair value gap. So I got in here. Stop loss at the high. Take profit was at the low-hanging fruit objective at the lunch lows, and you guys can see we got hit. I was 14 of my 15 contracts off here, and then I actually ended up getting stopped at a break even. I had like a runner for like 100 something points, but just kind of chopped around. But that was the simplest trade that I took this week. Really, the thing that I want to go over one more time is just, I don't know if anybody saw my Twitter, but the last leg of distribution is the lowest resistance liquidity. And so if price is heavy and you're very close to your drawn liquidity and you see these kind of 1 minute fair value gaps and order blocks, etc., all continue to support price lower, you're going to get your drawn liquidity hit very fast. Every PD array created should hold price. And it does, right? You guys can see if you go through your own chart, if you're looking at this screen right now, every PD array on the lower time frame, everything's fractal, right? So everything created on the PD array, every PD array created on the lower time frame should hold price until your drawn liquidity is met. Price is heavy. It's been heavy. As soon as we took out previous weekly high, right, we just dumped. We saw that price failed to take that 15-minute fair value gap. So now we're expecting price to hold and hit our drawn liquidity pretty fast. The main thing is that if the 210 or the 150 to 210 macro couldn't reach the 15-minute fair value gap, that shows to me that it's bearish. Also, this is what ICT calls the real silver bullet. A lot of people just know the silver bullet from 10 to 11 a.m. The real silver bullet is the last leg of distribution in a market maker buy or sell model. And that's exactly what this is. It's the lowest resistance kind of trade that you'll get into. And I had a very late entry, but you guys can see it's still very profitable. And breakers are important as well because every breaker created should hold price until the draw and liquidity is met. So once I saw this 5-minute breaker continue to hold price and we couldn't even get stabs up into anything, this wick here is being used as resistance as well. Couldn't even get to the halfway point of this 5-minute wick. All those things are telling me that prices continue to be bearish. And here's an up close candle, close below here. Couldn't even, or hits the opening price, or actually it doesn't even hit the opening price. More signs of bearishness, closes below the low. All these things are continuation signatures in my head on top of what we just went over. But that is the entire review. I'm going to end the recording here.